Imagine opening your bank statement and seeing a red line of $500 you didn't expect, feeling that knot in your stomach tighten as you wonder where it all went wrong. What if I told you that a budgeting trick that's been around for more than 100 years can stop those surprise charges right now? Stay with me for the next 17 minutes and you'll discover why the envelope method still beats every app on the market and how you can start using it tonight. If you've ever felt that panic when a receipt shows you're over budget, drop a money bag emoji in the comments and let me know which category trips you up the most. I'm curious to hear your story. The envelope system was born in the early 20th century, when most families dealt only in cash and every purchase had to be measured against the paper in their pockets. Back then, people would literally cut their paycheck into separate envelopes labeled rent, groceries, utilities, and savings, and once an envelope was empty, the spending stopped. As credit cards and digital banking took over, the habit faded, but the core idea, giving each dollar a purpose before you spend it, never lost its power. Today we're bombarded by subscription creep, buy now, pay later offers, and endless algorithmic suggestions that whisper add to cart at every scroll. A recent study found that 70% of millennials admit they don't track daily expenses, and that lack of awareness is why debt keeps growing. That's why the envelope method matters more than ever. It forces you to see exactly where every dollar is going, turning abstract numbers into tangible, visual cues that your brain can't ignore. By the end of this video, you'll know exactly how to set up the envelope method for any income level, avoid the common pitfalls, and see measurable savings in just 1 month. Let's break it down step by step. First, let's talk about the psychology behind why envelopes work. Humans naturally practice mental accounting. We treat cash in hand differently from a balance on a screen. When you hold a crisp $10 bill, you feel its weight, you see its color, and you know it's yours to spend. That tactile experience triggers a stronger sense of ownership than a digital number that can be swiped with a tap. This is where loss aversion comes in. Seeing an empty envelope on your kitchen table sends a clear, visual signal that you've reached your limit, whereas a zero balance on an app can feel abstract and easy to ignore. The envelope system also creates a visual cue that fits perfectly into the habit loop of cue, routine, and reward. The cue is the moment you withdraw cash for the week. The routine is labeling each envelope and placing the appropriate amount inside. The reward is the satisfying sight of each envelope gradually filling up, and later, the relief of knowing you haven't overspent. I spoke with a young professional who switched to envelopes and cut $300 off his monthly spending within the first 30 days, simply because he could see the money disappearing in real time. Now that we understand why it works, let's see how to build it for your life. Start by identifying the core spending categories that make up your budget. Most people find it helpful to group expenses into 8 buckets: rent or mortgage, utilities, groceries, transportation, savings, debt repayment, fun, and miscellaneous. You can adjust the names to fit your situation, but the idea is to keep the list short enough to manage and broad enough to cover everything. Next, decide what percentage of your income belongs in each bucket. A classic rule of thumb is the 50-30-20 split. 50% for essentials, 30% for discretionary spending, and 20% for savings and debt. If you earn a modest income, you might shift a few points from fun to essentials. If you have a higher income, you can allocate more to savings. Write these percentages down on a simple spreadsheet or a piece of paper, and then calculate the actual dollar amount for each category based on your monthly earnings. For example, if you bring home $3,000 after taxes, 50% for essentials would be $1,500, 30% for fun would be $900, and 20% for savings would be $600. You have 2 options for the physical containers: traditional paper envelopes, a binder with dividers, or a modern digital envelope app that mimics the same principle. The key is consistency. Whichever method you choose, treat each envelope as a separate account that you cannot dip into unless you move money from another envelope with a clear purpose. Many people start with paper because the tactile feedback is strongest, Then transition to a digital version once the habit is solid. The cash withdrawal routine is the heart of the system. Choose a day each week, perhaps Saturday morning, to go to the bank or an ATM. Withdraw the total amount you've allocated for the week, and then sort the cash into the labeled envelopes. As you place the bills in each envelope, say the category out loud: $1,500 for rent, $900 for fun, and feel the commitment. If an envelope runs low before the week ends, you have a built-in decision point. Either pause non-essential spending, reallocate from a flexible bucket, or find a small way to earn extra cash. This moment of choice is what keeps the system honest. If you've ever felt that rush of anxiety when you realize an envelope is empty, let me know in the comments. I'll reply with a quick tip for each category.
Your feedback helps shape the next part of this series.
Now, let's address the biggest roadblocks that make people abandon envelopes. The first is envelope fatigue. After a few weeks, the novelty wears off, and the routine feels like a chore. The solution is a weekly envelope check-in, a 5-minute ritual where you sit down, tally the remaining cash, and adjust the next week's allocations if needed.
This keeps the system fresh and gives you a sense of progress.
Unexpected expenses are another challenge. Life throws curveballs: a car repair, a medical bill, a sudden travel need. To handle these, create a buffer envelope that holds 5 to 10% of your income. This safety net is only for true emergencies, and you replenish it as soon as you can. If the buffer runs dry, you have a clear decision point. Either pause discretionary spending or look for a short-term side gig. Digital temptations can also erode discipline. Even if you use a digital envelope app, the ease of transferring money between categories can be a slippery slope.
To combat this, try a cash-only day once a month where you rely solely on the physical envelopes for all purchases. You'll be surprised how much you notice the difference.
If you share finances with a partner or roommate, communication is essential.
Sit down together, explain the envelope system, and decide which envelopes will be shared and which will remain personal.
Joint envelopes for rent, utilities, and groceries keep the household budget transparent, while individual envelopes for fun and personal savings preserve autonomy. Measuring progress is simple. At the end of each month, count how many envelopes were fully funded and how many required a top-up.
Celebrate the wins. Each fully funded envelope is a victory. You can even create a visual progress chart on your wall, marking each successful month with a star. Seeing that streak grow will reinforce the habit and keep you motivated.
If this is blowing your mind and you're ready to take control of your money,
smash that like button and consider subscribing so you don't miss the next episode where we dive into advanced strategies for scaling the envelope method to multiple income
streams. Stay tuned, because the journey to financial freedom is just beginning. Now, let's dive deeper into how you can take the envelope method from a simple household tool to a powerhouse that supports multiple streams of income, irregular paychecks,
and even long-term wealth building.
Imagine you have a side hustle that brings in extra cash every month, or perhaps you freelance and your earnings fluctuate week by week. The classic envelope system can adapt to those rhythms without losing its core strength of tangible, visual budgeting. First, think about the concept of income buckets. Instead of treating every dollar that lands in your account as the same, you separate the money the moment it arrives. When a paycheck or a client payment hits, you immediately allocate a portion to a primary bucket for your essential living expenses, another slice for your savings goals, a third piece for debt repayment, and a final segment for discretionary spending. By doing this allocation before you even look at your bank balance, you lock in the purpose of each dollar and prevent the temptation to drift money into the wrong category later on. If your income is irregular, the key is to build a baseline envelope that covers your minimum monthly obligations. Start by calculating the lowest amount you need to cover rent or mortgage, utilities, groceries, and transportation in any given month. Place that amount into a dedicated envelope each time you receive money, even if it's a small amount. Over time, as you receive larger payments, you can top up that envelope until it reaches the full baseline.
Once the baseline envelope is fully funded, any surplus can be funneled into growth envelopes, Think of them as the engines that drive your financial future.
One powerful growth envelope is the investment envelope. Instead of waiting until the end of the month to think about buying stocks or contributing to a retirement account, you set aside a fixed percentage of every incoming payment directly into this envelope.
When the envelope fills up, you transfer the cash into your brokerage or retirement platform in one lump sum. This approach not only automates your investing habit, but also leverages the psychological boost of seeing a physical stack of cash earmarked for future wealth.
Another advanced strategy is the debt snowball envelope. If you have multiple debts, credit cards, student loans, a car loan, assign each debt its own envelope. Allocate a base payment to each debt envelope every month. Then use any extra cash from your surplus envelope to add to the envelope of the smallest debt first.
As that envelope empties, you roll its funds into the next smallest debt envelope, creating a cascading effect that accelerates repayment. The visual satisfaction of watching an envelope shrink to nothing is a potent motivator that digital balances often can't match.
Now, let's talk about the hybrid model that blends physical envelopes with modern digital tools. Some viewers might wonder whether they need to carry around a stack of paper envelopes every day, especially if they rely heavily on cards for convenience.
The answer is that you can keep the core principle pre-allocating money into categories while using a budgeting app that mimics envelopes.
Choose an app that lets you create separate virtual envelopes and set transfer limits that mimic the physical barrier of cash. The crucial part is to treat each virtual envelope as untouchable until you deliberately move money into it, just as you would with a paper envelope. A common pitfall with digital envelopes is the ease of moving money between categories with a few taps. To counteract that, you can impose a transfer fee on yourself. Perhaps a small amount of cash you have to physically place into a transfer penalty envelope each time you move money digitally. This creates a friction that makes you think twice before reshuffling funds, preserving the discipline that the envelope method is built on.
For couples or families, the envelope method can become a shared language that eliminates money arguments.
Sit down together and map out all the household categories: rent, utilities, groceries, childcare, entertainment, and a joint savings goal like a vacation or a home renovation. Create shared envelopes for the joint expenses and individual envelopes for personal spending.
By visualizing each person's contribution and seeing the envelopes fill up together, you foster transparency and teamwork.
If one partner earns more, you can adjust the contribution percentages, but the envelope structure stays consistent,
ensuring that both partners feel the same level of control over their finances.
Students can also benefit from a simplified version of the envelope system. Tuition, textbooks, food, transportation, and a small fun envelope are enough to get started. Since many students receive a monthly allowance or a part-time paycheck, they can allocate a set amount to each envelope at the beginning of the month. If a surprise expense arises like a broken laptop, use the miscellaneous envelope, but make a note to replenish it from the next month's allowance.
Over time, students develop a habit of living within their means, which sets a solid foundation for post-graduation financial independence.
Retirees, on the other hand, often have fixed incomes from pensions, Social Security, or investment withdrawals. The envelope method can help them manage healthcare costs, leisure activities, and unexpected medical bills without dipping into their principal.
By assigning a specific envelope for medical expenses and another for travel, retirees can enjoy their golden years with peace of mind,
knowing that each dollar has a purpose and that they won't be forced to sell assets in a crisis. Let's not forget the power of visual progress tracking. Beyond counting how many envelopes were fully funded, you can create a streak board on a wall or a whiteboard. Draw a row for each month and color in a square for every envelope that hit its target.
Over a year, you'll see a mosaic of colored squares that tells a story of consistency and growth. When you look at that board, you'll feel a surge of pride that fuels the next month's discipline.
If you're using a digital app, many of them offer a calendar view where you can mark completed envelopes, giving you the same visual cue without the paper.
Now, I want to hear from you. What's the biggest challenge you face when trying to stick to a budget?
Is it the temptation to swipe a card, the unpredictability of freelance income, or maybe the difficulty of getting a partner on board? Drop a comment below and share your story.
I'll be reading every response and we'll pick a few to discuss in the next video, offering tailored tips that address your specific hurdles.
Another question that often comes up is whether the envelope method can coexist with long-term investment strategies like retirement accounts or real estate. The short answer is yes, and the long answer is that the envelope system actually enhances those strategies by ensuring you have the cash flow to make regular contributions. When you allocate a portion of each paycheck to a retirement envelope, you create a disciplined habit that mirrors the automatic contributions you'd set up with a traditional employer plan,
but with the added benefit of seeing the cash physically set aside.
This tangible reminder can be especially powerful for those who don't have an employer-sponsored plan or who want to supplement it. If you're a freelancer juggling multiple clients, you might consider creating a separate envelope for each client's payment. When a client pays, you place the money directly into that client's envelope, then allocate percentages from that envelope to your living expenses, taxes, savings, and discretionary spending. This method ensures you never overlook tax obligations, which is a common pitfall for independent workers.
At the end of the quarter, you'll have a clear picture of how much you've set aside for taxes, reducing the stress of a large, unexpected tax bill. For those who love travel, the vacation envelope can turn a vague dream into a concrete plan.
Decide on a destination, estimate the total cost, and break it down into a monthly savings goal. Each month, place the required amount into the vacation envelope.
When the envelope is full, you have the cash ready to book flights and accommodations without dipping into emergency funds or credit cards.
The excitement of watching the envelope grow can keep you motivated throughout the planning process. Now, let's address a subtle but important aspect, the emotional relationship you have with money. The envelope method does more than just allocate cash. It reshapes how you think about spending.
When you physically move money into an envelope labeled fun, you're giving yourself permission to enjoy that portion of your income, which can reduce feelings of deprivation.
Conversely, when an envelope for essentials runs low, you feel a natural urgency to prioritize those needs. This built-in feedback loop aligns your emotions with your financial reality, making it easier to stay on track. If you've ever felt guilty after splurging on a night out, try the Reset envelope. Keep a small envelope labeled Reset with a modest amount of cash. When you overspend, you can use the Reset envelope to cover the shortfall, but you must also commit to a corrective action like cooking at home for a week or cutting back on another discretionary envelope. This creates a balanced approach that acknowledges human fallibility while reinforcing accountability. One final advanced tactic is the Future Self envelope. Write a note to your future self describing a financial milestone you want to achieve, perhaps buying a home, starting a small business, or achieving a debt-free status. Place that note inside an envelope that you only open when the envelope's target amount is reached.
The anticipation of reading that personal message can be a powerful motivator, turning abstract goals into tangible milestones.
As we wrap up, remember that the envelope method is not a rigid rulebook, but a flexible framework that adapts to your life's changes.
Whether you're a student, a freelancer, a couple, or a retiree, you can customize the number of envelopes, the allocation percentages,
and the frequency of reviews to match your unique circumstances. The core principle assigning a purpose to every dollar before you spend it remains the same, and that principle is what makes the system so resilient across generations.
If you've found these insights useful, give this video a thumbs up and share it with anyone you think could benefit from a more hands-on approach to budgeting.
Your support helps the channel keep bringing practical, no-fluff financial advice.
And if you're ready to take the next step, comment below with the first envelope you plan to create tonight.
I'm excited to hear how you're going to put this into action, and I'll be back soon with deeper dives into topics like automating the envelope system, integrating it with investment platforms, and scaling it for multiple income streams.
Until then, keep your cash purposeful, stay disciplined, and watch your financial confidence grow.